It is a new week and we're going to look at the direction of the market. Basically, we're looking at the dollar, GU, and EU. So we're going to start with the dollar and we're starting with the weekly time frame. The weekly time frame will give us the direction of the market. So here we see for the past 2 weeks, we see price have sweep liquidity below this low here. So we have external range liquidity taken, and then we're expecting price to take internal range liquidity, and we have price already at the internal range liquidity heading to external range liquidity. So where will it be our draw on liquidity? This low will be our next draw on liquidity. So in the internal range liquidity, price is currently respecting the breaker block, because if you mark the entire candle here, you'll see that price has entered into this breaker block. Yes, or some might call it mitigation block, whichever, but I know that there is a resistant candle here that price has entered into, and we see price heading into the external range liquidity. So price is not just respecting the internal range liquidity as in form of fair value gap, but also this is also a good confirmation that price is going to respect this level. So we're expecting price to come to this draw liquidity. On the daily time frame, seeing that price yesterday has created this particular expansion here, because Monday has already played out, which makes it easy for us to determine the price direction. So we see price entering into the breaker block. So if you refine the breaker block on the daily, you will see that yes, price has entered into the breaker block. On the weekly time frame is mitigation block, but on the daily time frame is breaker block. Reason is because we have this high here, we have this low, we see price has created market structure shift, and then we have this low. So this is a break of structure and price is respecting this high. So what do we have on the daily again? At the area of resistance, that means at this particular level, all you need to have is to determine the market structure shift. You should be able to see market structure shift at this level. So because the market structure shift will facilitate the retracement into a particular level, while the break of structure will confirm the overall change in direction. What do I mean here? So at this moment, you will see on the daily we have higher high, higher low, higher high. Then we see this. So here on the daily we have market structure shift. It's telling us that, oh, this low will be taken out, because had it been we didn't have this market structure shift on the daily, we would have said, okay, this down close candle is going to hold its price for another bullish prices. But because this market structure shift has happened, we know that the next draw on liquidity will be this low, and price might not necessarily go straight to this draw on liquidity, because price might decide to have a bounce at this level to come back into this candle that is violated, this particular order block that is violated, and now this becomes breaker. This is what we call mechanical trading, because here on the daily we have market structure or shift, but on the 4-hour time frame we have break of structure at this level. So we see market structure shift here on the daily time frame, which tells you that, oh, since daily time frame has market structure shift, then this one will be the target on the weekly time frame. And if 4 hours have this break of structure here, it's telling you that the direction is going to be bearish. So here is break of structure on the 4 hours, but here is market structure shift on the 4 hours. Do you see it? This is market structure shift. So the market structure shift on the 4 hours is to create this price range to this level. But as soon as this level is violated, which makes it market structure, which makes it break of structure on the daily time frame, is telling you that yes, this price is going to be heavily bearish. So we've seen this, and I want us to pay attention to something very important now, because here we have on the 4 hours time frame, price has created this market structure shift, and we see a break of structure. We also have two levels that we need to pay attention to. We have this level here. Price can decide to come back and find support at this level, and also at this level. This order block has been mitigated. This order block has been mitigated, so we're not expecting price to come to that level. And also we see that this order block has also been mitigated. However, we have a tiny fair value gap. So price is too far for price to come to this tiny fair value gap, but anything can happen. You see this tiny fair value gap, but I'm not expecting price at that level. But this fair value gap here with this low at this level is a very good point of interest to pay attention to, that price might reach before going down. We also have price opening with a gap at this level, and the gap was bullish. So if gap is bullish, we might have a bullish day for price to retrace back into those levels I mark. So here price can decide to come here and go bullish into this level. So going to the 1 hour time frame, every week, if you're going to use the 1 hour time frame, you should be able to see break of structure here. So we see market structure, break of structure, and look at something here. We have a gap opening bullish. There's a gap opening bullish here. So mostly if there's a gap opening bullish, there's every likely the price is going bullish, but we need to watch what price is doing, because price will not start going bullish. There must be a level where price is going to be buying from. So look at something here. This is the place I marked on the 4 hours time frame, but on the 1 hour time frame, you see that we have a breakout block. So we might see a very strong retracement from this breakout block, because we have a low here taken, and we have this market structure shift here. Then we have this breakout block at this level. So price might decide to say, okay, let's respect this level. Do you know why? Because the breakout block is not mitigated. How is it that the breakout block is not mitigated? We also have the market structure shift at this level. So let's put market structure shift. Then we have our inducement here. We see price creating this inducement at this level. So the market structure shift and the inducement. So our inducement is this level. So price has not mitigated this breakout block here. So I'm expecting price to come and mitigate. And if price should mitigate, then we are going to have a form of retracement back into this range for continuation bearish. We have to follow what price is doing in the market. So if we're going to follow price, remember, like I said, market structure shift is to facilitate retracement, but break of structure is to facilitate continuation into price direction. So even though we'll have a market structure shift today and here for this retracement, guys, we are not supposed to be putting our attention on buying except this high is taken. If this high is taken, which is break of structure, we can be buying. But as far as this direction is concerned, even though we see market structure shift on the 1 hour, it could be to facilitate into this level, and then we'll see price coming back. That's why we need to follow price direction. So this is what I have for the dollar index. We should watch out for this level and expect retracement, because we see price opening with a bullish today. So there's every likely we'll have a bullish retracement. So let's go to GU and see what we have on GU. On GU, the same thing. We're going to start with the weekly time frame, and on the weekly time frame, it's almost similar to what we have on the dollar index. Here we have price swept this external range liquidity and also this external range liquidity here. So price is targeting internal range liquidity, and also inside the internal range liquidity, we have this particular breaker block. So because it's on the higher time frame, we're going to take including the week. Price has entered into the breaker block. What we need to do is to go to the daily time frame, because we have our draw on liquidity for this week and also for the subsequent day as this high. So now from the weekly, we go to the daily time frame, and on the daily time frame, we'll see that we have this sweep of liquidity, this low. So let me remove this, or we can refine it. Let's refine the breaker block here. We see price entered into the breaker block, and also we have SMT divergence. Yesterday we have SMT divergence here, and also sweep of liquidity, SMT with the dollar, and also sweep of liquidity below previous day last week. Then yesterday we have this bull run, and we see that price created market structure shift here. We see here price take out this low, this high, and also created break of structure. So if you want to see it clearly, if you go to the 1 hour time frame, you will see that we have sweep of liquidity here. Then we had market structure shift at this level on the 1 hour time frame. And when this happened, the market structure shift was to facilitate this price coming to this level, which is the order block. But because price has closed above it, we now have break of structure. So you see, market structure is very, very important. You have to learn how to use market structure. So we have this break of structure, and yesterday we saw this bull run. So today, if price is going to go bullish on the dollar index, we're expecting price to hold at this fresh order block because this has not been touched. It's not that it hasn't been mitigated. So we want to see price coming into this order block here and then have some reversal into the market before going bullish. However, price can decide to take this out, this liquidity. So you have to follow price action before going bullish to outdraw on liquidity. So let's go to the Euro USD. The Euro USD on the weekly time frame also have similar direction: internal range liquidity, external range liquidity, internal range liquidity, and then we are targeting this external range liquidity. So price has entered into the internal range liquidity and also at this breaker block here. So do you see it? It's very, 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 very simple. Then on the daily time frame, we see price has created this higher low, or let's say lower low. Then we are expecting price. Yesterday was Monday, and today is Tuesday. Here we're still expecting price to come into this drawn liquidity. So what do we have on the 4 hours time frame? We had our market structure shift on the 4 hours time frame, and we had our break of structure also here. So we have break of structure, market structure shift, and a sweep of liquidity here. So it's telling us that price is bullish. And you see, this is a trendline liquidity. Price will go there for liquidity. So let's follow what price is doing. So today we might see a bit of retracement and then we continue buying. So for entry confirmation, guys, this is another thing entirely. You have to learn how to take a trade at discount premium. I'm also seeing a pattern before you take a trade. So this is what I have for the top down analysis for the week.